Good morning and good afternoon. Welcome to the webinar organized by Dassault Systems. Can digitization turn compliance into a competitive advantage? I'm happy to introduce our panel today, Angelique Angerwal and Trevor Goodman, and myself, Anurag Vaklu. Angelique is a program manager, MiFID II and IDD at Swedbank. She has over 19 years of experience in financial business in a Nordic-Baltic environment in Swedbank and SEB, where she ran cross-border multicultural management assignments with skilled specialists. Angelique is based in Stockholm, and Swedbank is a modern bank firmly rooted in Swedish bank savings history, with about 8 million private customers and more than 600,000 corporate customers. Swedbank is Sweden's largest bank in number of customers. Trevor Goodman is Managing Director, Head of Legal EMEA at Legg Mason. Trevor has over 20 years experience working as an in-house lawyer for asset management companies. He has also worked for Morgan Stanley Investment Management for 7 years and also for Hill, Samuel and Gartmore. He has been involved with various technology-related activities that include solutions building and the scoping of fintech and regtech developments. Trevor is based in London, and Legg Mason is a global investment management firm based in Baltimore, USA, with an AUM, assets under management, of $728 billion. I am Anurag Vaklu. I am the global business consultant for Dassault Systems. I've been with them for about 5 years and have spanned roles such as business development and creating predictive analytics solutions for risk management. Prior to Dassault, I was a fixed income strategist at State Street Global Advisors, having spent about 8 years there, including roles in enterprise architecture and advanced data analytics. Prior to that, I was also at Fidelity in the role of a technical advisor for their trading and brokerage division. I have about 23 years of experience in financial services, and Dassault Systems is a over 35-year-old company, software company that prides itself in being a scientific company. It operates in 12 industries, financial services being one of them, with 14,000 people, 56 global R&D labs, and over 200,000 enterprise customers spread across 140 countries. And it has 100 million online users as well. So with those introductions, I just want to also mention a quick couple of logistics for the call, for the webinar today. We will take questions during the session as we go along, and also at the end of the session. And we promise not to mention your or your company's name unless you want us to. So feel free to ask any relevant question. So how can digitization turn compliance into a competitive advantage? Today, with the help of our panel here, Angelique and Trevor, we would like to show you how increasing regulation has digitization as the key answer to address a lot of the challenges posed by the regulatory burden. As we all know, the financial world changed about a decade ago. To bring it back on track and rebuild customer trust, more than 80 regulatory reforms have been passed that are touching areas of financial services that were not affected before, such as product management, governance, and investor suitability. Regulation is one of the top drivers of change in financial services today. Just to give you an example of several of the regulations that have been passed since then, obviously the famous ones, 2010 Dodd-Frank Act, Wall Street Reform Act, the Consumer Protection Act. In the European Union, MiFID II, UCITS, EMIR, AIFMD, PRIIPS, Basel, just to name a few of the many. Just this morning, I was reading online 2/3 of the financial firms are unlikely to meet the MiFID II deadline starting January of 2018. And just to give you a sense of the regulatory burden from a recent Wall Street Journal chart this week, what you see here on screen is the number of times in the red box that the words shall, must, may not, prohibited, etc. appear in the US Code of Federal Regulations for banks and banking. So just for the US and just for banks and banking, from 2008, it was about 25,000, and now we're more than double at about 55,000. Complying with this regulatory burden is not an easy task. A couple of additional examples. In France, for example, a 2015 law requires French institutional investors to disclose the carbon footprint of their portfolios. Socially responsible investing, SRI, as it's also called. Can you imagine the cost of complying, the cost and effort of complying with something like that? A newer regulation that initiated in 2016 and has been modified and will come into effect in 2018 is the GDPR, the General Data Protection Regulation out of the European Union, which is to strengthen and unify data protection for European Union individuals. Now, we know that the disclosure of data breaches causes customers generally to switch away from the firm that discloses the breach as one of the many things that this regulation will cover. So how can you comply? How can your firm comply with a regulation like this and make it into a competitive advantage? And just a fun fact, at $1.9 trillion, which is the regulatory compliance cost to US firms, that is more than the GDP of Canada. So businesses in other industries such as aviation, life sciences, and the automotive industry have been using digitization to automate processes, to improve governance and compliance, to increase efficiencies, and reduce costs. And since the financial crisis, we have seen a growing willingness of the financial services industry to learn from these other industries as well. And in all fairness, financial firms are thinking about doing more than just reacting to regulatory reform, and they're investing in digital capabilities as a sustainable solution to meet compliance as well as strategic initiatives, especially in the areas of customer service, engagement, cross-selling, fraud detection, and risk management, to name a few. Why does this matter? It matters for growth and survival. Just to give you an example, one of the top factors millennials use to decide which wealth manager they're going to put their money with is digital excellence. Or in other words, does that firm have a smartphone or a tablet app? I'm simplifying it, but that's digital excellence is the top 3 factors of why wealth managers are chosen by millennials. Even regulatory agencies such as the UK FCA is leading the way amongst global regulators in promoting innovation throughout financial services with digitization via their Project Innovate, Innovation Hub, a regulatory sandbox, and a dedicated robo-advising unit. So in the entire financial services ecosystem, a lot of participants are actively moving towards digitization and cultivating its benefits. So what does digitization mean in our context? Just to sort of set the stage and make sure we all understand the broad sense in which we will use digitization today, let me explain what the digitization continuum is, as you can see on the screen now. If we've taken a sort of simplistic view for the last, let's say, 20 or 30 years, where a lot of firms started with paper and manual processes, Some firms still have paper and manual processes today because different sectors of the financial services industry are moving at different speeds along this continuum. And as we talk about this slide here, keep in mind where your firm falls along this continuum. We have a poll question coming up to ask you just that after this slide. After paper and manual processes, we come up to digital artifacts and processes, which is digitization of documents, for example, digitization of processes, upgrading of legacy systems, and processes across the enterprise. So this includes, when we talk about digitization of processes, this includes finding a common language that your enterprise understands, and possibly with the extended enterprise across the ecosystem of your clients, your supply chain, people and organizations that help you create the products that you're creating, your value chain, as well as the regulatory bodies and the government. So it includes harmonizing the processes, finding a common language, and in fact, one of those is a requirement for MiFID II and conduct of business. So right off the bat, by doing something like steps 2, as you see on the screen here, and step 3, you're beginning to meet and comply with regulation. In addition to this, as we'll show you further down, how this can provide a competitive advantage. Connecting silos includes people and process, not just data. So step 3, which is process automation and connecting silos, should span people as well. In other words, it's collaboration at multiple levels enabled by a digital platform. Think of it as a collaborative culture enabled and reinforced by digitization. I'm sure a lot of you have heard of the famous quote that culture eats strategy for breakfast or lunch. But here, you can enforce and enable a collaborative culture by digitization. And to the extent possible, as you go along this continuum, new digital channels for accessing new markets, for accessing different segments of the consumer market, millennials, Gen X, Gen Y, Gen Z, and whatever comes after that, towards the end goal as we know it today, which is big data, advanced analytics, AI, and IoT. So all of this entire journey, this entire continuum from steps 1 through 5 is the space as we know it today, and connecting silos, connecting with your customers, connecting with your extended enterprise or extraprise as some people call it, all of that part is included in digitization when we talk about this today. So at this point, I'd like to turn it over to our panel, and maybe we start with you, Trevor. Given this backdrop, given the regulatory backdrop and what we're looking here on digitization on this slide, what does digitization mean to you, your company, various lines of business, and if you can sort of comment on some of the benefits and drawbacks of this as well.
Sure, and thank you, Anurag, and hello everybody. And if I just take a step back and just put things in a bit of context from my organisation and where I'm sitting, I mean, Legg Mason is an active asset manager that combines its passion for championing the long-term goals of investors with the distinct expertise of 9 separate independent investment firms. And through ongoing product innovation and client service, we've become a world leader in asset management across 40 locations worldwide, and that's on 6 continents. So I think it's pretty obvious in terms of what I think personally about digitization and the benefits that it can bring. You know, when you're managing a very large organisation model across various markets and different regulatory regimes. And it's really a question of using digitization, I think, and technology really to manage the investment side, understand risk and engage and connect with clients, and really helping to drive economies of scale and really to achieve those better client outcomes. So I think specifically, and in that context, thinking about some of the benefits of digitization, and a little bit of a brainstorm from me, but I think hopefully this will resonate with people. Clearly, in an environment where a lot of people are really focusing on, or having to focus on margins and smaller margins, and perhaps having to do more with the same or even more with less, hopefully digitization brings increased work product and outputs and actually helps to improve consistency as well. Also, it helps with enhancements to existing products, and then hopefully it frees up internal resources. Maybe you can move away from some of the more routine tasks and free people up to really focus on the added value. From a cost management perspective, maybe after some initial spend on some of these solutions, there's hopefully a much more cost-effective way of doing things, a more efficient way of doing things. And again, from a risk management perspective, given all of the above points, hopefully there's a much more efficient way of managing risk and getting to the root of what you need to be overseeing and looking at. And I think, just overarching all of this is really using digitization to drive, certainly for an asset management firm, not only investment alpha, but operational alpha as well. In terms of the other part of your question, Anurag, in terms of maybe some of the challenges and perhaps some of the downsides, first of all, on the challenges and just thinking about it from an internal perspective, you clearly, before you start to digitize, I think you've got to make sure your existing processes are as efficient as they can be, prior to digitizing them. Although obviously that's it's a key benefit, but I think there can be some challenges at times in terms of taking a step back and looking at that manual process and making sure it's retooled before you apply any tech to it. I think as well, quite clearly, you need to make sure your data sets and information are accurate and up to date, and also that they continue to be accurate and up to date as well. And then I think you've also touched on this as well, Anurag, it's sort of the legacy systems and how do you apply digitization across a legacy platform. I think as well, something that's maybe underestimated, it's assessing which processes and interactions still require a human touch. It may be that there's certain things that require some human judgment still, or even just in terms of that client experience, you shouldn't just simply be automating everything away or digitizing everything away. It's all got to have value for the end clients at the end of the day. And then I think above all else, what's really, really important is that there's a clear strategy, an umbrella strategy from the top with timeframes, etc., within which each digitization project actually fits within. Just from an external perspective, I think at times there tend to be regulatory barriers, and sometimes, and again to the point you were making about sort of data privacy, Anurag, I think maybe that's been quite a key concern and can be a challenge in terms of dealing with it. For example, how can you create a digital passport to comply with AML requirements if there are significant data protection issues? And interestingly, I think there are currently some firms out in the industry that are collaborating together to try to look at how they can share information on clients from a financial crime perspective. In particular, I think they've been looking to use blockchain to do that. But again, one of the key issues there is the data privacy issues that arise when you're trying to cross jurisdictions and exchange information across different jurisdictions. And again, I think whilst the FCA has been very good and has been looking at Project Innovate and the sandbox that you mentioned, and a lot of other regulators have jumped on the bandwagon and have taken some of the FCA's ideas, there certainly needs to be a focus on cyber resilience and making sure there are robust systems and controls as well. So I think just to sort of sum up, I think whilst there are challenges, I think the benefits outweigh the challenges. I think the downsides of digitization are relatively limited. I think if it's done properly, it's a very powerful tool and clearly something that firms should be embracing. Yes, you have to look at sort of some of the dollar costs. Yes, you have to sort of make assessments around, do you buy out-of-the-box solutions or spend time developing bespoke solutions for your organization? Yes, there could be impacts on resources and early adopter issues, but I think broadly, it's an essential thing to be doing in business this day and age, both from a commercial and from a regulatory perspective as well.
Thank you, Trevor. Angelique, your thoughts?
Thank you. Hi, everyone. I work from a different angle, as I work in a large retail bank. Swedbank is the largest retail bank in Sweden and in the 3 Baltic countries. So MiFID becomes, as a program manager for MiFID II, IDD, and PRIIPS, in my opinion, MiFID is half of it on the back side, with the bond side making it more transparent and all the transaction reporting. And then you have the whole investor protection of it. And there are a lot of good things with these regulations, because it, on one side, forces us to become much more transparent, but it also helps the clients to understand much better what they are buying, what they are investing into, and what costs and charges they have to pay for. So I think there are a lot of good things with these regulations, even though from an inside-out perspective where we sit, it's a challenge, of course. But when you say yes to becoming program manager for a regulatory program in a large bank, you have to see the upside of it. And I completely agree with Trevor. Digitization is an enabler for the banks and also for the clients. I also think that it's not just the digitization from us, but also the customer behavior changing almost even faster. So when the customer behavior meets the technical development, that's when we get this fast movement in the market. I'm looking at the slide that we are looking at right now, and it says paper and manual processes. It works up to new digital channels, and at the end, big data, advanced analytics. And Swedbank was established in 1820, so we have 200 years. And I'm thinking, where are we on this map? And I would say we're a bit everywhere. We still have some manual processes, and we are still archiving papers. But we also established a new department recently on the big data side called CVM, because we realized that's where we have to be in the future. Unfortunately, as all the banks, in my opinion, we're not moving fast enough. So these regulations are helping us and pushing us to move a bit faster forward. So I think it's a good thing. I see it as a possibility.
Thank you, Angelique. So a couple of quick things. I like the things you mentioned. Trevor, you said you can't digitize everything, and it's absolutely important and critical to have that balanced approach. It's not, like they say, when you have a hammer, everything else looks like a nail. And that's not the approach one should take towards digitization. So I completely agree as well. You have to have that balance in mind. Some things have to still at the end be checked, perhaps manually or signed off. But on the other side, Angelique, you also mentioned something about harmonizing, and we talked about this, harmonizing to reveal synergies between departments as well, and that could be another strong benefit as you look at processes across lines of business, across different silos per se, and harmonize some of those processes to reveal synergies between departments. One of the downsides, sorry, go ahead.
No, when it comes to harmonizing processes, I'd say we're forced to do that, because when things become more transparent, the margins go down. And when the margins go down, you have to be more efficient. And to be more efficient, you have to digitize yourself. So that's kind of the conclusion of that. I could give some examples. We have a large research department, and the MiFID is regulating research. So we have to look into how to do that. Now it's manually, of course, by analysts. Can you digitalize it in some way? Can you robotize it? You need packages to make it much more efficient, or you're not going to be able to afford to keep it the way we used to, etc. Thanks.
Right. one of the, when you mentioned that you were a over 200-year-old bank, one of the examples that came to my mind in the paper and manual process part, UniCredit SPA, which is a global Italian financial services company that operates in 17 countries with over 147,000 employees and almost 860 billion euro AUM. They recently embarked on a massive document digitization project where they scanned a lot of their 2.5 million documents, stored all of that information digitally, obviously, optimized the paper management, made these searchable, automatable, and trackable. And the net result of this entire big project, they expect to save about 375 tons of paper and the effort of 250 full-time equivalents by 2019. So that's a lot of saving. And digitization, once you are able to digitize these massive stores of documents, it not only helps with automating the process, moving things along faster, but also in audit, when now you're looking at things that move along pretty fast and you don't have to have a lot of manual processes to look at paper. And that also helps significantly on the audit side of things too. And that in turn helps you towards the regulatory compliance as well. So before we move on, I'm going to open the poll, and I believe you should be able to see the poll on the screen now. I think you have about 2 minutes on the sidebar to answer this poll, which is basically, where do you think, this is for the audience, where do you think your firm is on this digital continuum from 1 through 5? And if you think you're somewhere in the middle, 3.5 or 4.5, feel free to round it up and answer the poll. So we'll probably give about 30 seconds for you to take the initial stab at answering this. And then we'll move on to some of the topics around regulation and what different aspects of the industry it has impacted, different examples, and then give you a sense of how you can leverage some of that using digitization to truly gain a competitive advantage. And competitive advantage spans, it could mean many different things to different people. Faster time to market. We know that typically the newest funds in a sector garner the most AUM quickly. If you're 4th or 5th down the line in launching a fund, it's not as profitable or successful. So time to market could be one of those. And I'm going to give a few more seconds on this one, and I think then you can continue answering the poll on the side as well when we move on to the next one. But stronger governance that leads to better regulatory compliance, that leads to a performance of the firm, sustainability of the firm, fewer fines getting hit on the firm. In the last couple of years, several tens of hundreds of millions of dollars in fines have been assessed against firms in some of these spaces, either in the product space or KYC, AML space, know your customer, anti-money laundering, and those areas. And that's where a very strong governance helps and compliance with regulation that drives that. So once you're done answering the poll, please hit submit. And let us move on to sort of the next part. We mentioned several regulations earlier, Dodd-Frank, FATCA, MiFID, and many others. Most, product governance is at the heart of some of these new regulations, which are demanding greater transparency, customer centricity, the harmonization of processes, as you saw earlier. That's, as I mentioned earlier, a requirement of MiFID II and conduct of business. And harmonization of these processes across lines of business, across geographies, and the silos that exist today. And institutions that create and distribute financial instruments must now prove that they're acting in a client's best interest throughout the product lifecycle, for example. So I mentioned the 2015 French law requiring the carbon footprint of portfolios for institutional investors. Another example from this side of the Atlantic, the largest U.S. pension fund, CalPERS, or California Public Employees Retirement System, as it stands for, as well as several other asset management firms, have self-pledged that they have to act in a fiduciary role for their beneficiaries. And they have committed, they signed a pledge and committed to mapping the carbon footprint of their equity investments a couple of years back. Now, imagine trying to do something like that on a paper and manual process kind of scenario, or even where you have disconnected silos that are not digitized, and a lot of this is done by manual processes across the organization. It's not an easy task, but these are now requirements. These are now regulatory directives or things that are coming down the pike over the next couple of years. In Switzerland, 2016 law requires increased disclosure by insurers of their financial performance, governance structures, risk management systems, and others. Governance structures, another very important aspect that digitization enables. And one of the things that caught my eye just in the last week, the chief compliance officer of a very large asset management firm said the greatest risk of non-compliance in financial services comes from employees cutting corners because of personal and professional pressures, not because they set out to break the law. And the danger is that such shortcuts become culturally entrenched if they occur frequently. And that is quite thought-provoking in many ways. So with these various laws, regulatory aspects, with these various sort of flavors of regulation and compliance, I'm going to turn it over again, maybe starting with you again, Trevor. How is regulation seen from a financial institution perspective, or from your customers, your client perspectives, your value chain, your ecosystem perspective? And if you can also comment on, how is this affecting the business in newer areas such as product development across the entire life cycle as mandated by some of these regulations, and product management as well?
Sure, absolutely. Look, I think generally regulation is seen within financial institutions usually as a burden and not as an opportunity, although I'll come back to that because I think that's maybe changing a little bit. But again, usually I think people see the regulation coming down the track as something maybe for legal and compliance to lead. I do think it's very important as a consequence then to translate the sort of dry legal regulatory text into business impacts, impacts for clients, the firm itself, and to really drive the conversation. And certainly one thing that I'm looking at with my legal hat on is really to see if there are any tools to help to drive that, anything we can use, any technology, any digitization to do that. I think the other part of this as well is that regulation now really is global. And you've mentioned a number of pieces of legislation, and they all tend to have quite common themes, whether it's lower fees, increased transparency, appropriate product sales, effectively functioning markets, protection of clients' assets. I mean, these are very common themes across very different regulatory regimes. And I think one of the things that certainly we're trying to do, and I know that other firms are trying to do, is to really connect the dots globally. And again, back to one of the points that Angelique was making, it's trying to make sure that you're driving that operational efficiency. If margins are being squeezed and there's lots to comply with in more complex products and models and organisational structures, then we've got to be smart in the way that we do that and try and connect the dots where we can. I think generally as well, there is and has been a lot of regulation. If I look at something such as MiFID II in Europe, will things slow down? I'm not sure. There might be some tweaks to existing regulation. There may not be sort of MiFID IV coming out, very soon, or MiFID III. But I think people are going to have to probably, given the breadth of what they're challenged with at the moment in terms of complying with some of these new rules, certainly with MiFID, which comes into effect on 3rd of Jan next year, I think people are going to have to adopt some tactical solutions initially. So there's going to have to be ongoing work to evolve those solutions and probably to apply more technology, more digitalisation to really drive efficient solutions. And then just before I sort of go on to some of the new areas, I think one of the points I just wanted to mention is that I think it is really important to look at the opportunity set rising from the regulation and what is possible. And sort of one example coming out of MiFID II is obviously there's a lot of trade transparency that's required going forward and a lot of compliance that has to go in to make sure those rules are being complied with. But given there's going to be lots of information out there, perhaps tools can be developed by firms to model best trading practice and to really make sure they're benchmarking what they do, one from an organisational efficiency perspective, but also that's going to drive better client outcomes as well. So clearly opportunities, and I think there's already that shift in thinking to make sure that people are picking those off as well. In terms of your other question, Anurag, in terms of how some of the how businesses in some of the other areas are being impacted, I think maybe there's a few things you can look at. I mean, certainly in terms of implementing, again, something like MiFID II, clearly digitization can help just simply with the project management. But then also, given some of the new rules require enhancements to product processes, product design and product governance and the life cycle, are there tools, are there things that can be done to help to improve the way that works and to make sure things are documented in evidence for regulators? Also, can processes be adapted to build in and evidence the new requirements, whether it's stress tests, new types of stress tests, or target market checks, for example? And again, and I think, Angelique, you touched on this earlier as well, how can the regulation be used in a way to maybe identify suitable products or to improve on suitability and coming up with the right product sets for end investors, and also how to price things in a more effective and a more efficient way as well. And I think just sort of generally in terms of the business universe as a whole, I think given the commercial pressures, I think you may see some consolidation on the product side, certainly as a consequence of MiFID II, with maybe some non-independents sort of pushing their own internal products going forward. And again, given the level of information and granularity of information that needs to be exchanged and people need to stay on top of, I think that will probably drive people to work with potentially with fewer partners on an ongoing basis. So I think those are some of the things that I'm seeing and thinking about, and some of the business impacts that we're seeing.
Thank you, Trevor. Angelique, your thoughts?
Yeah, I completely agree with you, Trevor. You said fewer partners, probably a consolidated product universe. That's what we see as well up here in the Nordics and in the Baltics. Swedbank is working closely as the only bank with the savings banks, and they are considered as third party as they are their own legal entities. So if we are going to keep having them as our distributors, selling our funds, we are still trying to keep the kickbacks. And then according to MiFID II, you need to prove quality enhancement, like you mentioned, Trevor. And in the beginning, that might seem as a challenge, but then when you start looking at the regulation, the text, you realize it's quite logical, and that's where it becomes interesting for us in Swedbank. MiFID II becomes a catalyzer for some of the nice things that we have wanted to do for many years but have not prioritized, and now we are forced to do them, or we are enabled to do them. And just to give a couple of examples, in the regulatory text of MiFID II doesn't really say exactly what a quality enhancement would be, but there are some examples. If you have a rich branch network, so you have a good access for your clients, if you have a good digital offering where the clients can access 24/7, might be examples of quality enhancements, not alone, but in combination with each other. And from our part, we're also looking at performance reporting as an example where you can see the performance of your savings, which might be a no-brainer for some people, but for us it has been a challenge to prioritize that, and now we actually have to do it. So it's going to be an improvement for our clients, and MiFID II is helping us to work through that. Same as I mentioned research before, we have a nice research department, and it's mostly for the institutional clients. However, you can also say it's a quality enhancement for your retail clients if you have good processes documented, etc. So a nice catalyzer helping us in trying to improve our offering to our clients, and it's going to become a better client outcome, like you said, Trevor. Thanks.
Thank you, Angelique. So I agree with both of you, and you mentioned a couple of interesting points here. In fact, both of you mentioned some of these. Cost, obviously, that's a universal sort of objective for pretty much every firm, reduce cost, actually. But you did also mention reporting, and an interesting comment from you, Angelique, about catalyst, meaning regulation as a catalyst to sort of initiate some of those projects that you always wanted to do, but they never quite made it to the top of the list in terms of kicking them off. So I have a couple of interesting examples around some of these comments. Just in terms of costs, we talked about compliance by design, where digitization is sort of integrated into your business process versus being an afterthought. The cost of compliance, for example, in a Thomson Reuters survey, for 75% of the survey responders, the cost of compliance were about 3 to 10 hours per week. And if you're coming up on 10 hours a week, that's pretty high in terms of effort put in compliance. For hedge funds, for example, the cost of compliance is 5 to 10% of operating expenses, or about 0.2% of their AUM. And for banks, it's about 12% of operating expenses, just for compliance costs. And so talking about costs, both of you mentioned reporting, which digitization definitely helps getting much further along in terms of your reporting capability, internal as well as external, for your clients, customers, for the regulatory bodies. An Ernst & Young regulatory reporting survey found that most large banks have separate departments for regulatory reporting in addition to their financial or SEC or government reporting. And this group can be as large as 100 people. So in terms of gaining efficiencies, and as you mentioned, Angelique, harmonizing processes, right now some of these firms have up to 100 people groups, separate groups, just for reporting to the regulatory bodies versus doing their financial reporting. So that's a couple of interesting observations. In terms of a stress test, Trevor, you mentioned the stress test, and one of the examples I found was, this goes back to how can you leverage digitization to gain a competitive advantage, the topic of today's webinar. And a bank's asset and liabilities are very diverse and complex, and we've seen that firsthand in the 2008 financial crisis. It's hard for senior management to typically get a full picture of the aggregated risk profile. It's not fully understood by the senior management or even the board of directors in the past. Stress testing can be a very powerful tool to increase that understanding, and by using the results sort of to evaluate not only to submit it to the regulatory bodies, but to evaluate the bank's business strategy, financial plans, and risk management. And so what some of the senior management across these firms are doing are they're using the outcome from the stress tests, which they have to do anyway to comply to regulations, to better assess tactical decisions that they're making, such as product pricing, product diversification, and just divesting their portfolio against their own strategic and tactical objectives within the firm. So, killing two birds with one stone kind of thing, and sort of reusing what they've already done for the regulatory body for the improvement and betterment of the firm itself. You also mentioned partners, Angelique and Trevor, and we actually had a question from the audience as well. The question was, what is meant by the value chain up in the earlier slide of the digital continuum? So the value chain is your extended ecosystem, the people that you partner with, that either you provide value to or derive value from. So just to give an example, these are not the people who make your product, which is your supply chain, to use the term from other industries. But this could be a social media group, for example, if you are more on the retail side, retail banking side, for example, where you might be crowdsourcing ideas for some of your newer banking products, for example. It could be aspects of your distribution chain, which are not directly involved with driving your product creation, product definition, and those kinds of things, but the ones that you get a lot of feedback from, because between the asset management firm today and the end customers, in 80% of the cases, is a huge distribution layer, and asset managers don't necessarily have full visibility into their end clients. So those are the kinds of sort of organizations or groups that form the value chain, as shown in the earlier slide, and as you call them partners here as well. So giving you another example of since we were talking about banks, Bank of Montreal, which is a large Canadian bank, created a personal banking app, as opposed to having filled forms in the past, which is the traditional way of, used to be the traditional way of opening bank accounts. And they recently got an award for this, I believe. They allowed a bank account to be opened within under 8 minutes on a smartphone. And that's just the sort of user end of it. But it reduced errors by 80%. They had a 40% efficiency increase in client onboarding and an 80% improvement in the audit process. And this is digital end-to-end. So there's many, lots of examples, a lot of metrics around the benefits of this. And the slide that I have on screen right now talks about some of these benefits of digitization. The light blue color being some of the more direct benefits, and following on with the darker blue, which are some of the more indirect benefits, sort of in a building block approach. And these eventually are used to address some of those drivers that we looked at the start of the presentation, and regulation being the biggest one of those drivers, but also customer centricity, diversifying into new markets and other things. So digitization can be leveraged not just for a regulatory compliance perspective and getting an advantage from that, but also in getting a competitive advantage from other aspects. So let me give you another example. We talked about General Data Protection Regulation, the GDPR, which is coming out next year for the European Union. So as I said earlier, this one talks about the fact that you have to protect the data for individuals in the EU. Now, how can you use this to gain a competitive advantage? So a couple of things that the sort of leaders in that space, thought leaders in that space are looking at is, one, if you're doing this for the EU, it's not that you as a global financial firm may apply this only to EU. So once you have digitized and put your processes in place to address or comply with GDPR, you will most likely not restrict yourself to the EU, but expand that globally across your firm. What does that do? That gives you a much better practice prevention across breaches, one of the things that GDPR is meant to prevent globally across your firm, and that obviously helps in the end for customer confidence in your firm. Normally, when you disclose a breach, as this regulation wants you to do, I believe within 42 to 78 hours, customers typically don't tend to stick with companies that disclose breaches. But once this regulation kicks in, many companies are going to have to disclose that they have been breached. At that point, your breach recovery practices come to the forefront. And if you can create the confidence in customers that you have established very good best practices for not only automating and disclosing breaches, but also recovering from them, very strong data protection measures, very strong data security measures, and highlight them, that builds confidence in the minds of the customer and eventually leads to a better brand. So not only will you be complying with regulations there, but you can then, in sort of an indirect way, use that as a competitive advantage because everybody has to do that. And we know, given the last couple of disclosed breaches, how often something like this happens, right? So I'm going to take a pause there and sort of just quickly go over to the poll results from the first poll. Some pretty interesting results have come in, and you should be able to see them on your screen now. And then after this, we'll sort of quickly go to general question answers and some wrap-up comments. So it's interesting that nobody is on paper and manual processes now, which is great, I believe. And most of, almost half of the respondents are in somewhere along stage 2 of digitizing their artifacts and processes and upgrading legacy systems. So about a fourth are in the automation process, connecting silos, and collectively about a fourth are in the big data, IoT, AI space, as well as new channels for market access. And this is interesting. It brings to my mind an example from another industry, aviation, life sciences, automotive industries. These industries have been using digitization for decades now. And just to give you an example, they're quite far along this continuum compared to the financial industry. For example, an Airbus A380, one of the most modern planes, has 4 million parts produced by 1,500 companies from 30 countries. Can you imagine the collaboration, governance, transparency challenges to make that kind of plane? But it's made digitally, end to end. So I'm going to sort of come to a couple of key takeaways and then open it as well to Angelique and Trevor for some closing thoughts and take any additional questions. Before we do that, Angelique and Trevor, would you like to comment on this poll results?
Yeah, I just having a look at them, I think it is pretty representative, I think, of where most people are. I think from my experience, I think there are a number of firms that are maybe a little further ahead. Certainly in financial services, they tend to be maybe asset managers that are part of larger banking groups. I think maybe some of the pure play asset managers are a little further behind. But I think there's certainly a recognition, as this is showing, that people need to be moving further along that continuum line that you set out, Anurag. And I think those that succeed will be those that do it in a smart way and really explore those opportunities that are presenting themselves through digitization.
And I can add that I'm happily surprised that no one clicks the number one, paper and manual processes. I started by saying I know we still have some of that in our bank, but I'm happily surprised to see that no one answers that one.
Thank you, Angelique and Trevor. Yeah, I wasn't surprised by the results per se. I was hoping to see a lot more around steps 3 and 4. But as you said, Trevor and Angelique, there's a lot of catching up to do, and I think as we saw from the earlier slide here, there are a lot of benefits, and hopefully we have been able to show quite a few of those benefits and how firms can leverage digitization, not just to comply with regulations, but take them a step further for a competitive advantage across all of these different factors and benefits. Some of the key takeaways, and then I'll answer some questions as well. Think of digitization as an enabler, not as an afterthought. It should be almost the DNA of the company. It's integration of digital technologies throughout your entire business. Digitizing processes end-to-end, harmonizing processes across lines of business in a balanced way, as Trevor, you highlighted as well. That's very important as well. And a few other things around the digital strategy that you might take. Allow for a cost-effective virtualization of your business on this digital platform. And what that means is, it's not just about outsourcing to more cost-effective areas of the world, but also opening up to being to your value chain that I was pointing out to earlier. Crowdsourcing ideas, getting feedback from your clients and customers and your entire value chain, distributions, partners, and depending on the line of business you are in. Customers can be a very powerful source of ideas and information and feedback, as we have seen very, very strongly in some of the other industries, especially in the retail space. Create a culture of collaboration and accountability, and digitization helps enforce that culture across your enterprise. Embrace the fintech ecosystem, fintech standing for financial technology. So embrace the larger ecosystem that works in fintech as well, and obviously have a relentless focus on the customer or the consumer or your end client as well. So Trevor and Angelique, any closing thoughts from your end?
Just the one. I just to emphasise, what we've been talking about, and I personally really think that digitalisation is absolutely key going forward, and I think it raises a number of strategic questions for people who are leading and running certainly asset management organisations in terms of how they're going to digitise and what that technology strategy actually is. I think there are a number of firms who are already a long way along the line on the continuum line. I think they're few and far, slightly fewer than maybe we think, but again, the poll supported that. But if you have a look at some of the recent press around, say, BlackRock, who are looking to transfer responsibilities from traditional fund managers to internal teams who've got data-driven approaches to stock picking. Other asset managers in the press recently appointing heads of machine learning, etc. So, there are people who are already exploiting some of the opportunities, and I think the successful firms are going to be those that exploit those opportunities in the right way for clients in the right way.
Thank you, Trevor. Angelique?
Well, I can only agree. I would say when I started my financial career 20 years ago, I started as an FX fixed income sales, and if someone would have told me that I would happily have been running a compliance program 20 years from now, looking into how to make more efficient and to digitalize, I would have been laughing out loud. But this is fun, and I think the fact that we arrange these kind of webcasts is a proof of how important this is and how the whole financial business is now going towards digitalization and more structured ways of working. So it's I'm interested to see what comes in the future.
Great. Looking forward to it as well. Thank you, Angelique, and thank you, Trevor. And I'd like to thank everybody on the call for listening in as well. Have a good day.
Thank you.